All right, guys, welcome out Trading Justice podcast. And this is another feature presentation where I get a chance to bring in all kinds of interesting folks from all across the world and talk to them about life, money, investing, whatever it is. I've got Beau Henderson here. Beau, how you doing today?
Good, going good. I'm excited about this, Tim.
You know, I know you already told me that you're from Atlanta, but even if
Right.
you did not, I could hear it in your accent, young man. I
That's right.
like it. Yeah, from the South your whole life?
That's it. Grew up here, went to school at the University of Georgia, and stayed here ever since.
Go Bulldogs. I like
That's
it.
right.
The thing about it is, Beau, you and I were just chatting a little bit before our podcast here, and you've got an interesting background. You've worked for and with Agora Financial. You have your own company. You've helped retirees for 16 years. You're the author of 9 different books. And, you know, I was looking across the titles, and there are definitely themes that our audience would be very interested in. And I asked you a question. I'm going to ask it again so our listeners can hear your answer. What are your big passions right now in 2019? What are the messages that you want to get out there to people?
You know, the big thing that keeps coming up, Tim, and the passion that keeps growing, it's a literacy issue. There's a financial literacy problem in this country, and even a subset of retirement literacy issue. So I'm passionate about sharing information that will help people navigate those things so that they can be successful with money. And we talked about it, not just money, but successful with money and life.
Mm-hmm. Yeah, you know, and I was looking at the titles of the books that you wrote, and I believe that you were telling me that the 10 Investments for True Wealth, which is written, and it's on Amazon. I believe that's where everybody can find it, right?
That's it. Mm-hmm.
You sold like 30,000 copies of that. That's pretty impressive. When did you first write that thing?
10 Investments, and that was my first book, and it's still my favorite book. I wrote that in 2011.
Mm-hmm.
And what 10 Investments was about, and if you want to kind of get an idea of the gist of the book, about half of it's financial principles, investments that you make in your financial life. The other half comes up of what working with clients has taught me over the years. So, hey, we got to invest in those relationships that are the most important to us. We've got to invest in our physical health. We've got to invest in making sure we're creating memories and experiences. So it's a combination of the money and the life. And what I found, the people that integrate that well, those are those people that you look at and you say, they're really happy. What is it they got going on?
Yeah, and money is a component of that. I've got plenty of broke friends that probably would like a little bit more money.
Absolutely.
But money alone is not all of that. And I've met, like I think you mentioned, the miserable millionaire type. You know, the entrepreneur who's out there hustling so much they don't see the forest for the trees and really aren't really enjoying their life, right? I mean, you got to have balance in all things, don't you think?
That's it. And one of the things I think the key is, what is it? I call it your definition of a rich life, meaning sometimes we run into danger when we model something we see somebody else do or what somebody tells us we should do, because that's not necessarily, we can chase that path, we can hustle, we can run it down, and then realize that's not really my thing. That's not really what it is that excites me and lights me up and what I'm my best at doing.
Mm-hmm. You know, you're a retirement authority. You do a lot of these interviews. Obviously, our podcast, we welcome you here. It's great. You know, as you go out there and you've got your face in front of the camera and you realize people are listening to you, what is the most important thing you're trying to get them to hear, right? You've got your messaging, you've got your vision, you've got your goals. What is one takeaway you want somebody in our audience to take from this interview?
Well, I think a good fit, especially since we talk so much here, as we've had some conversation earlier about investing, is that the best investments you can make, and I know your show supports this, is investing in yourself, becoming a better investor. That's a lot of investments there, but do you see what I'm saying? Is I see too many, you know, I'm a financial advisor by trade, but I hate financial advisors. That sounds funny, but I believe 90% of them are not competent to help people do what they're trying to do. So what I would say, if I can, one of the things, the problem in our industry is people are blindly trusting a person because they have a credential or a title. That's and right. My goal is, let's teach a man to fish. You can better lead me and co-create with me your financial future if you have the ability to know what your goals are, know what you're doing, know why we're doing what we're doing, and you're confident and it makes sense to you.
You know, this could easily spin down a rabbit hole, but I'll bring up a couple of ideas. I mean, you look at the Bernie Madoff situation that has become famous on Wall Street. He was the president of the NASDAQ, and you had very rich people, the one percenters, giving him lots of money when they didn't know how to read a chart. They didn't know what they were investing in. They were just pumping money and getting consistent returns. That's a big picture one, right? That's one been in the media, but even small picture, I have a friend. He's a good friend. I won't mention his name. He's a good trader, but he used to work for a big house of financial advisors, right?
Right.
Back in the 1990s when he was right out of college. And he famously now tells me, he says, Tim, when I was working there, I had 450 clients, average net worth, maybe $1 million. You know, the mom and pop who are at retirement, I didn't even know what I was doing.
All right.
He flat tells me that. It's like, I was just given the company line, right? And I understand there's a natural, bring somebody in when they're young and you got to train them up. So there's always going to be some ignorance, but is that industry broken, do you think, maybe?
It's absolutely broken. And think about what we just said and how you describe that. This is somebody that's admitting, hey, I was taught some sales techniques. I was taught by what I'm supposed to say. But to that person, that client, that is their life's work. Yeah. That is their life savings. So the industry is absolutely broken. And that's why what I think it needs to be more focused on education and less on sales tactics.
I think so as well. And potentially, you know, the more exposure we get on how financial advisors work and how mutual fund fees work, and it's not just a problem at the financial advisor level, it's what product are they pitching? You know, what basis points is that mutual fund charging over, let's say, whatever the market rate is. Mm-hmm. And if you've got a huge premium, they better be getting better returns every year, but that's not always happening, is it, Beau? A lot of times those premiums and the high fees for mutual funds are being pitched because some of those advisors have a reason to do it and they get paid for it. And I think a lot of the public, they just don't know how to look into that. It becomes intimidating, right?
And it's the multiplied effect of small changes, meaning that little fee this year might not seem big and might be easy for somebody to sell as, hey, that's just a percent there. But a lot of the strategy work I do with clients is we look at that and let's multiply that over the 30 years of your retirement.
Yeah.
It's hundreds of thousands of dollars.
That's incredible. I've done the tables. I show people all the time. And there's something I say quite often, and I'll say it again right now. People overestimate what they can do in the short term, and they underestimate what they can do in the long term. You know, they think that, well, I've only got a couple thousand to put into an IRA. When you're 25 or 30, that might not feel like a big impact. But if you do start investing early and you start planning and you start getting ready, that can make a huge difference when you're at that 55, 60, 65 age group, right?
Absolutely. That using that time, we used to go into high schools. Again, I'm a big believer in the literacy problem in this country with finances. We'd go into high schools and we'd ask kids, hey, what do you buy on the way to school or on the way home every day? And it'd be like candy, whatever, $5 worth. And we'd say, you know, if we put $150 a month, $5 a day, you'd be millionaires by the time you were your parents' age. It just blows their mind.
It's incredible. In fact, famously, my brother, Mark, he's the producer of this podcast, and my co-host is my brother, Matt. We got a family show here. We believe in nepotism, Beau.
Look at that.
Yeah, nothing wrong with that. They're all great investors, and we're out there coaching and helping people. Mark said he's quitting smoking because he did the math that if he quit smoking and invested that money into a dividend-paying company, how much more his kids would have when he leaves a legacy, right? He's like, I got to quit smoking right now, you know? So hopefully that could make a positive impact for him. But you're right, candy bars or smoking. Think of all the consumer products. Cup of coffee. Instead of Starbucks every day at $5, get a Folgers, you know, get a coffee maker and Folgers, save $4 a day. I don't know. I know it's small things, but when you're young, some of that stuff can make a difference. You deal with people from all ages, though. We're talking about the youth, but is your typical client maybe more close to retirement that you're trying to help them with planning and all that kind of stuff?
Yeah, the retirement planning firm in Atlanta, we focus on the transition period from working life to retirement life, about a 10 to 15 year window from say 50 to 65, 52 to 67, something like that. And why I focus there, that's the most challenging and the most interesting, but it's also the times when the decisions are made in that window. Some of those are ones that we can't afford to make a misstep. So it's the most critical planning, and the strategy is what's fascinating to me. Like, you know, do we draw down our 401k first and delay our Social Security, or vice versa? What are the tax ramifications of doing A versus B versus C? So it's really that window of preparing from transitioning to work, because there's not really good, for most people, as they stop working one day, then they're retired. There's not a real good transition, and I focus on that transition planning window.
I see. And I saw a few things when I was flipping through one of your books, and a couple of hot topics that you have here. And I gotta know what this is. The 20,000 mistake everyone's making.
Yep, $20,000 mistake. I will do here around different counties in Metro Atlanta. every month I educate on Social Security strategies. And it's funny, there's over 500 ways to claim Social Security. If you were to call the Social Security Administration, you would think there's 62 full retirement age and 70.
Mm-hmm.
And one of the things, every room I'm in, I'll find $20,000 to $60,000 of benefit of people not realizing that they can claim a spousal benefit between 66 and 70 in a lot of cases. And if they don't do it, that money's just left on the table. As a matter of fact, with Social Security, it fascinates me more than any other topic. I'll find $20,000, $60,000, $200,000 of additional income a family could use if they just understood the rules. But the problem is, we talk about this literacy. There's no good place to go get the information.
Mm-hmm. Yeah. I think it's hard for people to even know where to start, because we live in a world, it's true in financial literacy, but I think it's true in any education. We live in a world of Google and YouTube, so we feel like we've got everything at our fingertips, but it doesn't always give you clarity, right?
Well, a lot of times that's confusing, right?
Yeah, it's more confusing. It leads you down a path to where you're like, I've got all this stuff, but I don't really, it's like drinking from a fire hose. I don't know what to do with all of this stuff. And that's where a good one-on-one, you can't really replace that value. And that's my opinion. The other one, there was a simple strategy you used that saved a client $158,000. What was that?
This was a couple. This was just a month ago that this came up. They came to me, 62 and 64 years old, needed to basically replace about $70,000 of inflation-adjusted income for retirement. Their plan was to come in, start their Social Security now, 62, 64. They were going to supplement with their 401k assets, which there's about $750,000 in 401k assets, and run that out. What happened is I called a Social Security optimization strategy, where we ran different scenarios or modeled different scenarios. And by flipping and actually delaying the Social Security, take the higher taxable 401k up front those 4 years, we got them 10 more years of longevity on their income, so they didn't run out of money. And in addition to the 10 years of longevity and $158,000 of additional income, they saved $30,000 in taxes. Now, for me, that's a trifecta.
Wow, that's pretty awesome. And that's got to give you a lot of personal pride when you have a win like that.
It does, absolutely, because otherwise, they didn't have the information. That's for most of the people I deal with, $158,000 is real money.
Yeah, it's a lot of money. I mean, right. You're at 65 years old. I mean, you're talking about living expenses and trying to project out your life and all that kind of stuff. I do want to talk big picture economics here in just a minute, but I got a couple more before we go there. Thinking about this, when you do get to that age, a lot of times, and I'll just be very real here, the man dies before the woman, And I think that there's some complexity there when you leave a spouse and you can kind of leave them behind. What have you seen mistake-wise, if there are any common ones that somebody might want to avoid or be aware of in terms of just the spouses, what they should be thinking about?
Yeah, there's two scenarios that I see come up very often. And my passion for Social Security started a few years ago. A real good friend of mine, very successful business owner, he's actually a mentor of mine. He sat down over lunch and said, "Beau, I shafted my spouse." And I said, "I don't know if I want to hear this story." But then we got into it. What happened, he turned 66. He was still making hundreds of thousands of dollars with his business. But they said, "You can make as much as you want now. You're full retirement age. You might as well claim your benefit." He did. And why he was sitting down telling me he made a mistake is he realized at this point that if he had delayed that money that he didn't need anyway till 70, when he died, it would have given his wife an extra $1,000 a month for the rest of her life. Oh, and she'll probably outlive him by 10 to 15 years. So let's do that math, right? That's $100,000 to $150,000 that he shortchanged his wife. Very smart guy. And I realized if this guy messed it up, most people are probably not getting this stuff right.
That's really interesting. It's little things like that. I mean, I'm sure there's a mistake after mistake after mistake. And that's probably when you sit down and you actually talk to somebody, you do like a full triage, full assessment of where they are, what they have, and try to give them some direction. Those are some common ones. What are the most common mistakes? Let's start with a couple of different demographics that young people make in their 20s, 30s, even right when they get into college. What are some of the most common mistakes you see in financial planning?
Yeah, the big ones for the younger demographic is thinking I have all the time in the world, right? And like we're saying, if you can start with $50 a month, let's not wait until you say, I'll start as soon as I can put aside $200 a month. One of my very first jobs, I was helping run a 401k, and I had two kinds of people. And a lot of them, they would I could get them to start with $50 a paycheck, And then I would tell them, hey, let's bump that up a little bit each time you get a raise. Or I'd have another group that'd say, hey, when I can do about $500, I'll start. Guess what happened? 10 years went by. The one group never started. And the group that started with $25, $50 and slowly inched it up had $100,000, $200,000 saved 10 years later.
Yeah.
So that's one of the big ones. Another one with young people, especially with families, is risk reduction. Why you can leverage things like, and it's just simple term life insurance, why you can leverage your income and things like that and get things in place to protect your family. Because the bad side that people don't like to talk about is bad stuff happens sometimes. And there's nothing worse to run into a scenario where a primary wage earner goes away and then there's somebody left with 3 kids and they're at poverty level now.
100%. I mean, you know, there's a reason why those protections are there and why those products exist. There's no doubt about it. Let's move into that different demographic, kind of where I am. I graduated high school in 98. That'll date me. I turned 40 this year and I got 3 kids. So I'm that guy right there. You're just talking about raising 3 kids. And what are some common mistakes people in that demo make?
Yeah, we're getting now to where we're in the same demographic, basically. We're at the same age. So we're kind of in between that transition window. So we're still kind of in an accumulation period. But the biggest mistake that I see, that if I could help this group work on its clarity, it's about, let's get real honest, especially if you have a spouse or a partner, is, do we communicate and talk about what our real numbers are? I did a survey. I had 100 people come through the office. 1 out of 20 people actually knew their numbers. They knew their expenses and income numbers. So I call it know your numbers. And if we don't know our numbers and we're just hoping things turn out okay, we're very passively and reactively letting our finances have power over us, right? So that's the opposite. Mine is, let's get clear and let's get clarity. It might not be fun the first time you do the exercise, but Tim, I tell you, I found every time we do that exercise, everybody's relieved because they know where they stand and they know, okay, now we can come up with a plan to move in the right direction. So I think it's clarity and having conversations about money, not just when it's a stressful, bad conversation.
100%. I mean, it's the same thing with health. I mean, if you got a health issue, you need to go to the doctor and figure out what it is. Right? You can't just be in the dark, or else you're never going to move yourself forward, and you're always going to have that anxiety. I think with money, I think a lot of people, because they feel guilt or shame, maybe they haven't made as much as they thought, or their buddy that they went to college with is making more, and so they kind of just shove it down, right? I love that. Know your numbers. I think that's important. Know what you're doing from a debt perspective. You know, use debt properly. We all got to go into debt in different ways. There's no question, but be responsible about it. And if you are living beyond your means, try to get and dig down into it and try to bring that down a little bit. Don't overspend on consumer products you don't need. And you'll be amazed what happens. And you know this, Beau, is when you start to fix those little things, you got a little bit more money to invest, and you start to get education on how to invest. Now you'll build a much more confident future. I've seen it 1,000 times, if not more, right?
Well, and that money's starting to work for you, right? Now it can actually start going towards your priorities instead of you trying to catch up on debt and all those other things. And it's amazing how when we take those little deals, we communicate about money. And actually, I've had couples, and this sounds funny, but I've had words like intimacy, best thing we ever did for our relationship, when I actually got a couple to talk about money.
Yeah. I believe it, because they say that finances are the #1 cause of divorce cited when people get divorced. I get it. And now let's move into that retirement age. You talk about knowing your numbers and these social security things and the strategies, but what are some of the most common mistakes you see retirees make? Maybe it was earlier in their life that got them to there, or mistakes they continue to make later there, like that age demo of, say, 55 plus.
Right. So what happens, and this kind of carries over from what we're just talking about. If we don't have clarity, we get to retirement, we still don't really know where we are. We're just kind of putting it off. And the thing I see on a regular basis, I'll sit down, and I've done this over 3,000 times at this point, and I'll sit down. My first question is, I want to ask you, do you have a retirement strategy first that you understand? I've yet to have a person tell me that they understand the retirement strategy, which is funny. And the second one is just follow up, which is kind of pretty easy to, it's do you understand it, and are you confident in it? And of course, they're not confident if they don't understand it. So what I find happens is people get from their there's a lot of information about accumulating assets, do your 401k, save over time, but there's not a whole lot of information about how you prepare into a strategy. So when I get to retirement planning, where it's different from planning for younger demographics, is I'm focused 90% on strategy, 10% on the tools we use once we make sure we have the right strategy. Right. I'm not saying here's the stock, here's the fund we need. It's what's the strategy. Then only once we're in complete agreement on what that ratio is of, liquidity, growth, income, how do we fix that? If the strategy's right, you're going to be successful. And when we deal that. So that's the big thing, is transitioning to a mind of getting a retirement strategy in place that accomplishes those two things I ask up front. By the time we're done talking and working through your situation and taking all these puzzle pieces you've accumulated in your financial life, we're going to put them together as effectively, as efficiently as we can. And my goal is for you to tell me, I have a strategy I feel good about, I understand, and I'm confident in. And that puts people in the top 5% of their peers, and they feel good about that.
I love it. I love it. We're talking to Beau Henderson here. He's the CEO of the RichLife Advisors, helped over 4,000 families discover their true relationship with money and equip them to live a more healthy, wealthy, and fulfilled life. And I got a couple more things, and I want to have some fun with this here, Beau. We live in an economy right now where you look at it and you deal with Social Security. And I know that probably when you're sitting down and you know your numbers, you want to just deal with, okay, how do we reduce tax? How do we increase income? How do we get you better prepared for retirement? Do you have any concerns maybe the Social Security system is not going to be there in 10 or 15 or 20 years, or that we're going to have problems there? I'm sure this comes up.
Yep. There's the viability of the solubility of Social Security. It comes up every single meeting we do. So here's for our listeners. Here's the deal. If you're within that window I've been describing, we're going to be able to plan pretty much off of the data that we have. If you're full retirement age, you have a $2,500 benefit, we're going to be able to plan on that. But the system does have to be addressed, because you've got to think about it. Back in 1935, when it was created, the average person died at 60. So a benefit that starts at 65 works beautifully, and it's sustainable forever, right? But now we're living into our 80s and sometimes our 90s. So what we'll see continue to happen is we've already seen full retirement age start to shift from 65 years ago to now all the way up to 67. We see the earnings limit increase so that more money that people make can be taxed for Social Security purposes. So we see different things proposed. So the answer is, if you're in that window of that 10 to 15 year window, I think you're good, and we can plan around what we know today. I think if it's the generation behind that, our generation, we might have to plan on, we might not be able to start Social Security early, not 62. It might be 65 before we could even start. And it might be 72 before your benefit would max out. So they're going to keep pushing it down the road until it finds some kind of equilibrium where it can be sustained. Because here's the issue at the end of the day. We talk about politics. It'd be political suicide and for anybody to ever try to take away a benefit from a whole demographic that's currently receiving that benefit.
They vote. Let's call it like it is. I mean,
vote.
Right.
There you go.
Yeah. My background's in political science. So yeah, it's a tough one, because you're right. I mean, a lot of the economics behind how they built the system, we're not planning for the way that we live now and how long we live and the healthcare improvements and all that kind of stuff. Interesting. The other one I want to ask you about is this. I look at the way that people are approaching retirement has fundamentally changed. I'm a stock guy. I track the market each and every day. I trade stocks, options, the commodity market, futures market, all that kind of stuff. Not everybody should do that, but most of our clients, they do options or stock or some basic investing or whatever it is. And I look at that and I think, what about the retiree who's not a trader? They're still in the stock market, because so many of the traditional products, which would have been maybe the 10-year bond or tied to corporate bonds or some kind of interest-bearing product or an annuity, historically, they were more attractive.
Right.
So you could get to 65 and then you could take it out of equity and you could pump it into the bond market and still get a good return. But because interest rates have been artificially low for so long, those aren't as attractive as they were. Do you think maybe retirees are taking more risk than they know by holding on to equity?
Yeah, there's definitely that's another deal that comes out there about why we've got to get very clear on what piece of your nest egg needs to be allocated to your income plan, your inflation protection growth plan, and your liquidity. Because for most people, it just rolls over what was in their 401k. Right? That's just kind of what drags into retirement. And you're right, bonds have shifted to we found some better short-term deals in no fee annuities that actually were performing better than bonds for that piece of money. We focus a lot more on dividend kind of things to help offset some of the low yields right now we're seeing. So it is a different game, and it's a different, there's a little bit different rules to retirement planning than accumulation planning. So you're right. That's That's one of the biggest things. I would say 90% of the time when we look at somebody's situation, unless they're all in cash, that's probably the other 10%. They're way more risk exposed than what they would tell you their risk tolerance was. There's an offset, right? Or there's a mismatch.
Yeah, and it's probably not knowing where that risk is. You know, if you've been in high performing stocks for 10 years and never really had to sell them, you might feel like they're safer than they are, but the history of the market does have corrections. And so it's kind of a complex situation. And that's where it comes back to what we started with, education. You know what I mean? What about gold? Do you deal with metals as a hedge? Do you deal with hedging strategies, things like that?
Yep, I like metals as an asset diversifier. Right, we'll take and it's certain people that have I want people to understand before we put that or break that off. I want people to understand why we're doing it and why it makes sense for the portfolio. And we'll do that as an asset diversifier. It's another asset class that'll act different, that'll offset and act different than different things. So we might take 10% and pull it off and do metals. So that's something we will do. But some clients just say, hey, I don't want to be fancy. I just want to stick with this thing I understand. And they're a little more vanilla.
Yeah, I see. Beau, this has been a pleasure, my friend. Do you have any, first of all, how do people find your books? What's the best way they can find you? All that kind of stuff.
Well, I'll tell you, one of the best things right now, we're doing that core book, that 10 Investments for True Wealth. My publisher is promoting it for just the cost of shipping at richlifebook.com. So if you like some of the ideas and concepts we've been talking about, that'd be a good way to get it, richlifebook.com. And beyond that, just my name, beauhenderson.com. You can plug into kind of what we do. You'll probably hear Tim on my show in the near future talking about some of this good stuff. I love when I find somebody else that loves this stuff. We can kind of nerd out, right?
I absolutely love it. I love everything about it. And I think really what it is because I love problem solving. I love the economics behind it, but I also love problem solving with people. Right. And what you're talking about, you get down, you get knee to knee with somebody and you sit down and look at their numbers, know your numbers, like you said. And man, there's a real fulfillment thing there when you can help somebody either make more money or achieve financial, freedom or get away from financial stress and move themselves towards the future that they've always wanted, right? One step at a time, one step at a time. All right, Beau, we are out. Very good job there today, guys. And really, beauhenderson.com, and go out and get his book for sure. Thank you, Beau.
Appreciate it, Tim. Had fun.